Babra, how are you doing? How would you utilize infinite banking if you already have really low interest rates on your loans like home and student loans? How would I utilize infinite banking if I already have that? Um, I'm not sure. I'm not sure exactly what you mean, but I'm going to guess. How I would utilize that, I'm assuming you basically have no need to pay off those other loans, like your home loan or your student loan. In that case, what are you doing with your money? What are you doing with your extra cash flow? If you have extra cash flow in your emergency fund, capital expense account, maybe, um, you're building up your infinite bank. And so now you have cash available in your infinite bank. You're not going to use that cash in your infinite bank to pay off a debt that has a low interest rate. But that's a great opportunity to utilize it to do some investments. So I would be looking at what are the possible investment opportunities out there that I can return a higher percent than it costs me to borrow money from my bank, from my infinite bank. And you can put that money to work. So your money in the infinite bank is getting you a death benefit and getting you some guaranteed growth, right? Well, let's make it do double or triple duty. You want to go put it to work for you doing some other types of investments, buying cash flowing assets, things that as it spits off money, it'll pay back that loan and potentially make you more. So I definitely wouldn't pay off low rate mortgages and student loans if I didn't have to. So I'm definitely all about trying to put that money to work buying some cash flowing assets as opposed to paying off very low debts.
If you want the car, let's say the car costs $500 a month, or you can just use cash, 30,000. Well, ideally what you'd want to do is you'd want to find a cash flowing asset that you could spend that $30,000, get the $500 and use that to pay for the car. Then when the car is paid off, you still have that cash flowing asset. So you end up with the car that you wanted, and you still end up in a much better financial position in 5 years once that car's paid off. As opposed to if you just spent $30,000 on the car, that's all that $30,000 did. And when the 5 years are up, now you just have a 5-year-old car. You don't have any more cash. You don't have anything to show for it.
I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.